welcome back to the Wealth Builder Movement. I am here with Jonathan T. Davis. He was with us earlier in the week talking about financial and asset management 101. But tonight we're going to talk about a different subject. We're going to talk about friends with funds. So how can we collectively invest in different projects and different wealth building activities, even if you might have a little bit of money, or even if you just have a little bit of money? Did you know that you could actually combine that with a lot of other individuals who have a little bit of money and invest it, even in businesses? I mean, we're not going to talk about it tonight, but crowdfunding, you can invest $2 if you wanted to with millions of people and support a business. But tonight we're going to talk about a little bit more intimately, investment strategies that are collective, whereas crowdfunding can be more public. This is maybe you and some friends, or you and people in the community, or you and a network. Some people you built through your social capital network get together and do different investment strategies. Well, I'm going to launch right into it. I know that we've already had you on before, Jonathan, but for those that may just be tuning in tonight, can you give a brief introduction of JT Davis Asset Management?
Yes, thank you, Angelique. We formed in 2008 as a direct response to the fact that, most large investment firms, I work for a few, they don't really look for clients who are, first generation money. They look for people who are very familiar with investing. Usually their grandfather or great grandfather maybe passed the money down to them. But folks like us, for the most part, we're the first one in our families that really had anything. You work a corporate job, you worked there for 20 or 30 years, you look up one day and your 401k is like, "Ooh, I've got all this money." And you're not the target client for that person. But I recognized there was an opportunity there, and more importantly, there was a need there for someone that looks like us to serve us and to bring us along in a way that's comfortable and that is conducive to the way that we're used to receiving information.
Wow, I love it. And then there's not that many Black-owned firms, so I'm glad that we have you to do what you're doing. And we also met one of your managing partners, I believe, or one of your senior wealth advisors, yes, Pi Charasika, earlier in the week and through a segment. Mm-hmm. But I'm going to get straight to the heart of it. We're not here so much to talk about your professional or your day job, right, but we're here to talk about your personal investment strategy. And I know that you have invested in a horse syndicate, and I don't know if I'm using that right term. I know syndicate's right, but I don't know what the... All right, so you invested in a horse through a syndicate. Let's put it that way. Yeah. And so can you talk about that syndicate that invested in that horse that ended up running in the Derby, how it formed and why you chose to get in it?
Yes, the syndicate, we actually own several horses, and the one you're talking about is Necker Island. As far as the syndicate itself and how it came to be, it started as a group of African-American men who knew of each other in the community but didn't know each other that well personally. And this kind of covered two bases for us. Number one, it gave us a chance to come together as a community and do something together. But more importantly, we all were familiar, because we live in Lexington, Kentucky, which is the horse capital of the world. We were very familiar with the historical context in which horse racing in America has traditionally been dominated by African Americans up until the 30s. So for the past, 70 odd years, we've been out of horse racing so long, most folks don't know that we pretty much ran horse racing. And we wanted to come back into horse racing in a very large way and compete at the highest level. So that's what we did.
Wow. I mean, that's phenomenal because I think there's so many aspects of wealth building that we started and then kind of got boosted out of, right? Mm-hmm. Through systemic injustice, right, through racism, through slavery. Right. And then, now we're getting back into those wealth building aspects. So can you talk about maybe just what are some different types beyond syndicates of ways that people might pool funds together and do deals?
Yeah, it's a great question, Angelique. One way that people can come together is that if you have a few friends, and even if you have a very small amount of money, if you have $100 to $200 a month, if 4 or 5 of you decide to collectively come together and form an investment syndicate, you can buy shares of stock or shares of mutual funds for literally a few dollars a share. The key to it, though, is 2 things. Number one, you have to all agree to agree. Doesn't mean that you agree on everything, but you agree to agree in the sense that we're going to move forward in this manner for this length of time. Number 2, you want to make sure that there's an end point. You want to make sure that if someone decides at some point in the future they no longer want to be involved, there's something that you guys have written down that you, I guess to coin a phrase, you want to plan the divorce before the wedding. You want to decide how we're going to end before you even get the thing off the ground. So that's one way you can do it for a very small amount of money.
So you have just given us a great explanation of different ways that we can pool funds, and also talked a little bit about, hey, when you're doing this, you might want to get some lawyers involved. What Did there ever come a time when you all were forming the syndicate, or even that you've seen, I'm sure you have worked with others that have done different types of, pooling funds to do investment strategies. What are some of the common things that you see where this can go wrong? Other than the fact that, yeah, sometimes you win, sometimes you lose in the deal,
Right.
but in terms of the actual formation and in terms of doing this the right way.
Right, that's a great question. I think the thing to keep in mind is that the winning and losing part of it, as far as like being in an investment, is usually the smallest component of the entire thing. It's usually about deciding in the very beginning who's going to do what and to what extent. For example, when we typically do investment clubs, even if I'm going to advise someone on their investment club, I think it's very important that each member of the club has a specific duty. For example, let's say we had 5 people in a club. Each member of that club should be assigned an asset category or assigned a particular stock and follow that stock, understand that stock, and come back to the group once a month or once a quarter and give a report. And I think that will also allow them to learn more about how the stock market works, how it works to be in investing, as opposed to being purely passive at that level. At that level, it's more important to gain knowledge, because if you only have $100 a month, I'll just be perfectly blunt. You don't have very much money yet, but you do have a chance to gain something that you don't have, and that's knowledge. Gaining knowledge first. In the Bible, it says that. And in all you're getting, first gain understanding. So if you understand how it works, the money will come. So it's important that each member of that group learn about how this thing works. And if you can agree on that, you're going to have a lot of success.
Wow. So it sounds like the first step to pooling funds and investing in anything is investing some knowledge.
Absolutely.
For every member of that fund. With some books.
Yeah, go on Google. Google's free.
Listen.
Yeah.
And I bet everybody being invested in that knowledge probably helps avoid any conflict when somebody say, well, you picked that idea and I didn't want to, I'm sure that everybody say, hey, no, we all encourage each other to learn as much as possible. This is no one person making a decision. And so I think that that's really good. And you already talked about the legal paperwork that you want to do for the funds.
Yes.
I just have one last question, and that's really around, are there some rules about inviting people to these funds? I've seen some maybe whoopsie daisies where there were quote unquote public offerings made
right.
on a private fund. So
Right.
are there just like some simple things that we might avoid, even though we're pooling funds with friends? Should we go on Facebook and make a general announcement about this?
Absolutely
come one and
not,
come all?
Angelique. Let me cut you off. Absolutely not, because there are rules involved with that. As far as selling securities illegally, you must be licensed to sell securities. Anytime you make an offering to sell stock or sell a mutual fund or exchange traded fund or anything like that, somebody on your team must be a licensed individual, preferably either a Series 7 or a Series 65 fiduciary, of which I'm a Series 65 fiduciary myself. So people love to have me in their group because I can handle all that stuff for them. But having said that, though, if you're going to do something on a very small basis, it's 4 or 5 friends from college. It's not going to be nearly as important to have a legal structure in place. But even if it's just 4 or 5 friends, you guys still should do something in writing. You should all agree that we're going to do this amount of money per month for this length of time period, and each person in the group is going to be assigned this duty. If you do those things on the front end, you're much more likely to have success when you're done.
And I bet even if it's family members, you want to have at least some sort of agreement.
You want to definitely have it in front of his family members.
Well, thank you so much.
Thank you,
I enjoy you sharing your knowledge.
Yes.
I hope, of course, to interview again on other topics. And I look forward to continuing to learn from you about asset management, about collective investing. I hope you all have enjoyed this as well. Please stay tuned, come back, join us. We are not done yet, and keep building wealth.
Hello, I'm Timothy Findley Jr. The Louisville Change Lab has taken the incubation model and enhanced it through innovation and outreach to the West Louisville community. We at Life Development Corporation are thankful to be a part of this transcendent initiative with the University of Louisville Change Lab.
We are proud to bring together university resources, Tier 1 level research, and residents as expert collaborators from West Louisville neighborhoods. Why West Louisville? The greatest of all time comes from West Louisville.
Cassius Clay from Louisville, Kentucky.
Knowledge, resources, and love abound. It's access that we all need. Louisville Change Lab is your connector.
Hello, my name is Ivory Rollins Cross, and it is my pleasure to serve as the director of the Louisville Change Lab.
The Wealth Builder movement isn't about money, it's about peace of mind, hope for the future, and fulfilling your God-given purpose. You are a wealth builder. You're looking to launch a new business, invest in your community, make systemic change, and actionable plans. You are a wealth builder, but you can't do it alone. Join Wealth Builder Movement, an online collective advancing Black and brown wealth together. By joining our Facebook group and YouTube channel, you will learn from, invest with, and leverage others. Wealth is a group activity. Work, create, and build with others. Join the movement, the Wealth Builder Movement.
Welcome back to the Wealth Builder Movement. Well, listen, we have talked about general financial wellness. We've talked about real estate investing. We've hit up entrepreneurship and how you can actually get a business launched. We even talked about ways to fund your business and the creation of funds for funding your business. Well, guess what? We're going to go a little bit deeper into that subject, and we're going to specifically talk about venture capital investment. That was a term mentioned earlier in one of our other segments, but now we're going to dive deeper, and I am so excited that we have Moses. And Moses, I am not even going to attempt to butcher your last name. I have learned my lesson from previous interviews because Moses is a returning member to the Wealth Builder movement. But Moses, I would love for you to kind of just start out by introducing yourself, your journey in the investment world, and also give us a sneak preview into where you're at now.
Yeah, that sounds great, Angelique. Thank you for the invitation to come and speak today. It's a pleasure to speak and to share a little bit about me and about venture capital. So I'll go in reverse. I am currently starting a new growth equity fund with some colleagues that I've worked with in the past. It's called Iriba Capital. And, I think my journey to venture and now growth equity really began as an undergrad at school. And I really fell in love with economic theory. And that led to kind of a series of internships and sort of explorations around access to capital and how you deploy capital purposefully. That journey ultimately led me back here to Louisville, where I went to high school, to work at Chrysalis Ventures. And I spent the first, almost half a decade of my career there, really learning and growing as an investor. And I've spent now 4 years leading the direct investment charge at Access Ventures, another local organization.
Wow. And then from Access Ventures, really moving forward into your own fund, I believe, or a fund that you built with other individuals. Can you tell us a little bit more about Iriba? Of course, anything that you're allowed to mention. I know as these funds get formed, there's rules and things about what you can or cannot state, as we even learned earlier today.
Yeah. So, I first really grew up as an investor at Chrysalis, and I worked with Wright and Charlie a lot during those days, and they'll be my two partners in Iriba. And we came together. Iriba really taught. It's actually a Rwandan word that means it's just sort of a fresh water well. It's the closest thing in Rwandan culture to an oasis. And that firm really exists to find opportunities that are at the nexus of financial opportunity and positive outcomes in healthcare and education in particular. So we'll be investing in growth equity opportunities, so a little bit past the earlier venture stages, in companies that are both driving strong returns for shareholders and ultimately our LPs while producing healthy outcomes for patients, students, and workers.
Wow, I love it. And the fact that, I mean, again, the opportunity to see another Black investor partnering with other individuals to build out a fund. Now, I know we've already kind of gotten into the meat of this talking about venture capital, but one thing that I would like us to do is maybe rewind back a little bit. And could you explain to our audience, what is venture capital? Where is it used? And when might a business want to take advantage of venture capital?
Yeah, so venture capital is really, it is another sort of tool in the toolkit of sources of capital that are available to entrepreneurs. And it is a little bit higher risk if we kind of use risk as a way to stage capitals than loans, which, most folks are familiar with. Just kind of going to a bank with your business and they'll ask you about, okay, give me your cash flows over the last few years, and they have pretty standard underwriting methods that have been tried and tested for many years. But they tend to be risk averse, right? They tend to want to invest in companies that have not only revenue but profit and a history of profit that a bank can kind of put through their process. Venture capitalists sort of come into the fray when a business that has really strong market opportunity and a lot of potential for growth has not yet been able to, and is maybe purposefully not a profitable business. So they don't have the type of profile that a bank can underwrite. But there are, kind of ways to get a sense of the opportunity, the business model, the team, and investors will kind of in effect buy a piece of your company in exchange for capital that the entrepreneur will use for growth.
So it's basically using other people's money to grow your business in exchange for a piece of the business, we call equity. And we had a whole segment on what equity investing was. But can you give us, we talked primarily in the previous segment about angel investors. Do angel investors and venture capitalists think differently? Is that still true today, that they have different ways of vetting a company, or that they want to get in at different stages?
Yeah, I think, some of those distinctions are starting to blur, and for a number of reasons. I think, one, over the last, call it decade or so, it's gotten, less and less expensive to start a business, just as, sort of technology takes various things that maybe used to take $5 million to get a business off the ground, and you can do it, with a few $100,000. And so that has allowed companies to, and actually I probably need to take a step back. So angel investors have historically been kind of that really first pool of risk capital that is outside of the cash flow model that a bank might underwrite. And it's, these are folks who maybe are high net worth individuals or who are just interested in taking pretty high risk venture type investments, but toward, maybe at the time when an entrepreneur may just have an idea with a little bit of kind of early revenue, and they help that entrepreneur sort of fund that first critical year or two of capital that will get them to a stage where they've proven enough about their business and about the market to be able to attract venture capital. So venture capital used to be, and it's still a little bit, to use a little bit upstream from where angels like to invest. Now, as I mentioned a second ago, as it gets cheaper and cheaper to raise capital, companies are actually able to get further and further down the line with angel investing. And so there used to be sort of pretty clear distinctions around, if you're doing a seed round, you probably want to go talk to angel investors, and then when you get into your Series A, you'll go talk to venture capital investors. Those distinctions are a little bit kind of blurry, and everyone has now slightly different definitions about when Series A begins. And then you're also seeing venture capital firms get little bit earlier and earlier in when they will invest, and or maybe seed angel investors kind of pulling together seed funds. So it's a little bit of I like to think more in terms of where the business is, and then the type of investors who would be interested and add the most value than kind of your classic terms around angels do seeds and VCs do A's and beyond.
And, one thing that you mentioned there was seed round, Series A, and we've actually been talking about this a little bit all week long, but it just occurred to me that we haven't really defined what those terms mean. What is, when we talk about different rounds of investment, pre-seed, seed, Series A, and then going on B, C, God willing, ETF for some companies. Moses, can you give a little bit, just briefly, just tell us, what do the different funding rounds mean, and what does it mean when I say I'm doing a Series A?
Mm-hmm. Yeah, Angelique, it might be good to even start by talking a little bit about the decision to take venture investing and then the type of path that can put you on. I think, we mentioned a little bit a second ago, just loans and bank and kind of VC being one tool, a toolkit. It is among the most expensive types of capital that an entrepreneur might take down to help grow their business, in that, you are selling part of your company. But not only are you selling part of your company, you're now taking on investors who kind of have their own, let's call it math. And a lot of venture funds have investors themselves that, and they have a type of, they basically have what they're looking for at the entry and exit of each decision. And so these distinctions, at the highest level, really just talk about where a company is in its development. So a company that's taking seed capital may be one that is just starting out, again, maybe has an idea with a little bit of revenue. And then as they take seed investment from angels or maybe some early VC firms, they get a chance to really build out and prove out their model and get some penetration into their market and get to a point where they've grown enough to be an attractive candidate for a Series A investment. Now, the reason I talked a little bit about the fund math and the decision to get into venture is that if someone kind of puts a seed investment into a company, they generally expect that you're going to use that capital to get maybe a year or 2 years of runway and get to a point where you'll be an attractive candidate for a Series A investor. And now that impacts what you ought to do as an entrepreneur. You need to build your business in a certain way that will be convincing to the Series A investor. And the A investor, when they invest, similarly, are probably funding, 24-ish months of your company's growth. And they also want you to be able to take that money and get to a point where you can do a B round and you can get, and it's not all, as the space gets wider, there are some types of investors that may be a little bit more kind of, call it friendly to different types of ways to get paid back. You don't have to get into the whole, I got to go from A to B, B to C, C to exit pipeline. That's just something to be aware of about who you're taking money from and what kind of their goals are.
And so I want to follow with just one last question, for this segment. And that really is, we've seen for Black founders that getting venture capital is incredibly difficult. And so there's power in having, they've done studies to show you have an increased likelihood of getting venture capital if the venture capital firm has a partner that identifies with your ethnicity, identifies with your race, and identifies with your gender. Especially we're seeing an emergence of other Black founded venture capital firms that are popping up around the nation. If I really want to be serious about going after venture capital, and I know that it's very tough for a Black founder, I want to put myself in the best position possible. Again, there's nothing I can do about, racism or systemic injustices. But if I'm going after venture capital, especially if I'm trying to be attractive offering to a venture capital firm that's made a commitment to having a very diverse lens when they look at their portfolio in terms of the founders, not necessarily in terms of the actual product lines of the businesses. But when we talk about that, can you give us like some quick actionable things? What are one or two actionable things that I can do to prepare for a pitch to a venture capital firm?
Yeah, I think really the most important things that you ought to do come even before the pitch, and then they can help shape your pitch. But it is, so this business is really, I think it's really a network business. And we talked a little bit last year about, or maybe 2 years ago, about, just that there for a long time, there haven't been a lot of people of color in the business in general, for a variety of reasons. And that has just led to, the folks who get funded are folks who share networks or share sort of experiences with the folks who are allocating capital. And so you touched on, it's been encouraging over the last year, 2 years to see a number of firms start that are, led by people of color or people who have networks in kind of diverse communities, get funded, and hopefully that'll help roll back some of those statistics that are pretty discouraging. But I think just circling forward to your question, and the reason I talk about it being a network business is I think the most important thing you can do ahead of a pitch is really spend a lot of time understanding. Well, again, we touched on very briefly understanding whether you want to even be in a venture company, and if that's right for you, because it's there are a lot of costs to being an entrepreneur that takes on venture capital, and there are a lot of benefits and a lot of great opportunities. But so as you think about kind of your goals and your business, the next thing to do is try to figure out who kind of shares kind of the perspective that you have as a business builder, and who's active in your market and who has maybe an investment thesis and has invested in companies that are similar to you and or similar in the way that you're approaching your problem and you're approaching your market, and get to sort of know. It's almost like preparing for any test. Not to. I don't necessarily like kind of the imagery that like the venture capitalist is the teacher and you're the student, but just if you put that aside for a second, just kind of trying to solve for how does this person think and where do they invest? Is that right for me? And then, how do I kind of come across or share across how my vision and my approach to this problem in this market maps to, to kind of their perspective. A lot of VCs like to, talk on Twitter or on blogs. And so there are just ways to try to, to understand who they are, what they're about, and whether there's a good alignment with what you're building.
Well, thank you, Moses. Thank you so much for being with us. It has been just a delight and a pleasure to have you. Thank you for all the great advice, wisdom. Also, thank you for being another Black founder to start another Black founded venture capital firm. We need more of those so that we can get more Black founded businesses capital. So one thing that I want to just not gloss over is what Moses said as his parting words, which is be strategic when you are identifying and pitching to venture capital firms. You don't want to waste your time talking to a whole bunch of firms that have never invested in a business that is in the sector that your business is in, or that you don't fit within their portfolio, their collection of businesses that they have invested in. So I'm, again, grateful to you, Moses, for that advice. And I want to encourage everybody, this is not the end. This may be the end of this evening, but it is not the end of the Wealth Builder Movement Black Wealth Week. Stay tuned. On Thursday night, we have another virtual segment, which will be teaching you a whole workshop on how to get minority certifications so that you can get contracts at corporations like Humana, corporations like Coca-Cola, corporations like Boston Scientific. Every corporation has a supplier diversity arm, and this workshop will have some representatives from corporations that have these arms. So these representatives will be talking about how you can position yourself to get contracts in those companies and how you can best do the minority certification process. This is being hosted by a Diverse Entrepreneurship Summit co-founder, Cynthia Lee Stewart, and I know it's going to be a phenomenal workshop, virtual workshop. The other thing we have happening on Thursday night is the Black Bay Experience. It is invite only for the in-person part, but we will be live streaming out, again, more knowledge, more wisdom on how to build wealth and what we call the Bay industries, bourbon, ag, and equine industries. Yes, this is our special Kentucky edition of Black Wealth Week knowledge base. And so you make sure you tune back for that. Then on Friday afternoon, we're going to have a virtual tour of the Russell neighborhood and different neighborhoods in Black areas, Black neighborhoods, historically Black neighborhoods, where we see revitalization efforts going on, and also hearkening back to something that one of our panelists mentioned, Jonathan mentioned, areas where we actually had historical wealth there. That wealth was taken away, and now there's revitalization efforts to get wealth back into those communities. And that happens not only here in Louisville, but you saw that in Atlanta, you saw that in Detroit, in several neighborhoods. Of course, Tulsa, Oklahoma, we know what happened there. And so we're seeing how do we regain the wealth of a community that lost it due to systemic injustices, racism, and the like. On Saturday, I'm super excited about this. Tune in. There is going to be an open air market and a celebration of the Smoketown neighborhood. This is an in-person event, but again, we will live stream out to those who are not in the city, a panel which will specifically be focused on those that are in the vendor fair business. In other words, maybe you have a company and you've been doing vendor fairs locally or nationally, and you want to get to the next level. You want to get your product on a store shelf. You want to start selling online. You want to know how to do better packaging, how to do chemical analysis. We will have information for you on that through a very engaging panel, again, that will be live streamed on Saturday. But for those of you that are in town and in the city of Louisville with us, feel free to come in person to this wonderful, I'm calling it a block party. It's put on by the Community Foundation of Louisville. And again, it's a celebration of Smoketown, which is a historically Black neighborhood in Louisville that has gone under a lot of plight, unfortunately, and has been underserved, but is now having a reemergence. People are reinvesting. Another neighborhood, you know, that people are now reinvesting in and rebirthing the rich heritage and the rich wealth of that neighborhood. So come out and celebrate that. That's Community Foundation of Louisville and the Melanair Marketplace, Black-owned business marketplace. Come out and get your Saturday goodies at that marketplace. I go every Saturday. I just enjoy it and I love it to death. Put on by Manhattan on Broadway. So again, we are not done. You may continue to enjoy our live streaming content on Thursday, Friday, and come out on Saturday if you're here in person. But again, even more content for you on Saturday for those of you that are virtual. And last but not least, we will be announcing on Saturday the winner of our grand prize, this 10,000 Derby weekend package being sponsored by Today's Women. This package includes a 5-night stay at a hotel, tickets to Derby and Oaks, and of course, the most important part of this package, the Derby Diversity Business Summit. This is a summit where major corporations come together, where you can learn about how to get contracts in these corporations, where you can pitch your idea through business pitch competitions, where you can attend festivals to do social capital building, and of course, Derby, Derby, Derby. This is a wonderful package, $10,000, and all you have to do to get it is fill out the survey that we're dropping right now and share in 5 minutes, just a 5-minute survey, share your lived experience so that you can help generate data that will help businesses, corporations, keep them accountable to increasing the diversity, equity, and inclusion of their entities. So buy from the stage of Wealth Builder Movement, but continue to celebrate throughout the week Black wealth. See you. Okay, cool. Oh, paste it to this.
We are proud to bring together university resources, Tier 1 level research, and residents as expert collaborators from West Louisville neighborhoods. Why West Louisville? The greatest of all time comes from West Louisville.
I am the greatest.
Knowledge, resources, and love abound. It's access that we all need. Louisville Change Lab is your connector.
Hello, my name is Ivory Rollins Cross, and it is my pleasure to serve as the director of the Louisville Change Lab.
The Wealth Builder movement isn't about money, it's about peace of mind, hope for the future, and fulfilling your God-given purpose. You are a wealth builder. You're looking to launch a new business, invest in your community, make systemic change, and actionable plans. You are a wealth builder, but you can't do it alone. Join Wealth Builder Movement, an online collective advancing Black and brown wealth together. By joining our Facebook group and YouTube channel, you will learn from, invest with, and leverage others. Wealth is a group activity. Work, create, and build with others. Join the movement, the Wealth Builder Movement.